People ask me this all the time, even now at 95. They lean across the table, sometimes at shareholder meetings, sometimes at dinner, and they say, if you had to start over with absolutely nothing, what would you buy first? And I always give the same answer, and it always surprises them because the answer isn't a stock ticker, it isn't gold, it isn't real estate, and it certainly isn't whatever the financial internet is most excited about this particular week. The answer is simpler than any of that and far, far more powerful. See, here's what most people get completely backwards their entire working lives. They spend decades buying things that quietly cost them time, a newer car, a bigger house, a gadget they'll stop thinking about in 6 months, things that feel like wealth but slowly and visibly drain it, things that look like success from the outside but secretly extracted from the inside. I figured something out sitting at that desk in Omaha a long time ago. Every dollar you spend isn't just money, it's crystallized time. It's an irreplaceable unit of your actual finite life. You didn't spend $50,000 on that car. You spent 3 years of your life on it. And when you truly see it that way, when that realization lands somewhere real, everything changes. The entire game changes. Today, I want to walk you through exactly what I would buy first, not just assets, not just stocks. 5 specific things, 5 pillars that separate people who build permanent generational wealth from people who spend 40 years running on a treadmill, genuinely wondering why they never seem to get anywhere. And I promise you this, by the time we're done, you're going to look at every purchase you've ever made and every purchase you're about to make in a completely different light. I want that to actually mean something to you for a moment. I bought my first stock in 1942, 11 years old, 3 shares of City Service Preferred. $114 saved from delivering newspapers across Omaha and selling chewing gum door to door. I was prouder of that $114 than I can adequately describe. I've watched 15 recessions come and go. I sat through 1974 when serious, intelligent people genuinely believed the whole thing might be finished. I watched the dot-com bubble inflate to complete absurdity and then detonate. And I was right there in 2008 when the entire global financial system stood at the edge of a cliff and sober professionals were visibly, genuinely terrified about what might happen on Monday morning. Through every single one of those moments, I didn't panic. I didn't abandon the businesses I understood and believed in, not one, because I'd learned something that most investors spend their entire careers circling around without ever grasping directly. Real wealth, permanent, fortress-grade wealth isn't built by reacting. It's built by acquiring the right things in the right order and then trusting time to do the work that most people are far too impatient to allow. So what are those things? And pay close attention here, because this is the part people always miss. Why does the sequence matter as much as the things themselves? Let me show you. Pay close attention to the order, because the order is everything. Pillar 1, the ownership fortress, why I buy businesses, not opinions. You know, there are always 2 kinds of people in any market, always have been. I've watched them for 75 years, and the pattern never changes. The first kind, I call them speculators. They buy whatever has a rising price. They follow momentum. They follow whoever the loudest voice on TV recommended last Tuesday. They wear financial armor made of opinions instead of facts. And the moment those opinions shift, the moment the crowd turns, they have nothing real protecting them, nothing at all. When prices drop, they panic, they sell. They lose what they gained and a fair portion of what they started with. And then, and this is the part that always strikes me, they blame the market. The second kind investors, they buy ownership, productive businesses, companies that make things, sell things, earn real money year after year, completely independent of what any commentator says on any given news cycle. Here's the difference that changes everything. The speculator is renting, the investor is owning now. I want to take you back to something 1929, the Great Depression. Banks shut their doors. Fortunes that had taken generations to build vanished in weeks. The people who owned speculative paper, bought on margin, chased for momentum, lost everything they had and everything they'd borrowed against. But the people who owned productive businesses that survived, companies making food people had to eat, utilities delivering power homes couldn't function without railroads moving goods that had to move. Those people didn't just recover, they built empires on the rubble of everyone else's panic. That's what productive ownership does in a crisis. It doesn't just protect you, it positions you. See, when I bought into Coca-Cola in 1988, it had nothing whatsoever to do with the chart looking favorable. I understood the business. I could calculate what it was genuinely, conservatively worth. And the market, which is irrational far more often than people are comfortable admitting, was offering it to me below that. Worth, that's the margin of safety. Benjamin Graham taught me this concept back when I was studying under him at Columbia. Graham's core insight was this: every sound investment needs a buffer between what you pay and what a business is actually worth. The bigger that buffer, the safer the fortress, the more ammunition you've built into the structure before the first storm even arrives. Now, here's the piece most people skip right past. When you own a productive business through the stock market or directly, something remarkable happens every single morning. The people there get up, go to work, and build value on your behalf, rain or shine, recession or boom, while you sleep, while you're at dinner, while you're on vacation, while you're reading your grandchildren a bedtime story, they show up and they earn. That's not speculation. That's not gambling. That's the market doing precisely what it was designed to do: systematically, patiently transfer wealth from great, durable companies to their long-term patient owners. The speculator looks at a 30% market drop and sees catastrophe. The investor looks at that exact same drop and sees a clearance sale on things he already wanted to own. Now I have to address something directly, because every single time I talk about building real ownership, the same topic comes up: cryptocurrency. I've called it rat poison publicly, repeatedly. I stand by that completely: rat poison. Here's why. A productive business earns money, it generates cash flow, it serves customers, it employs people, it produces something of tangible, calculable, lasting value. What does a digital token actually produce? It sits there and waits for someone more excited than the last person to buy it. That is not investing. That is a chain letter with better branding, a fancier vocabulary, and considerably worse odds. The first thing I would buy, the bedrock of every financial fortress I have ever built, is ownership in productive businesses. With a genuine margin of safety baked into every single purchase, not opinions, not momentum, not tokens. Businesses own productive business. Everything else is noise dressed as wisdom. Pillar 2, the freedom equation, the number that buoys your time back. Here's something I want you to actually do right. Now, while you're watching, I want you to calculate a specific number, a very specific number. Most people go their entire working lives without calculating it even once. And that single omission, that one missing arithmetic exercise, is precisely why so many hardworking, disciplined people end up working until their bodies give out. The number is your monthly expenses, not your income, your actual monthly expenses. Every bill, every subscription, every grocery run, every utility, every streaming service you signed up for 3 years ago and forgot about. Add them all up, every single one. That number is what I call your freedom threshold. It's the exact amount your investments need to generate passively every month before your labor becomes optional. See, the game isn't to get rich in some abstract, undefined sense. The game is to cross that specific threshold. Because on the day your passive income from dividends, from productive businesses you own, from well-chosen assets that compound exceeds your monthly expenses, something genuinely extraordinary happens. You buy your time back, and that is the purchase no paycheck has ever made possible. Charlie Munger said it directly, and I've thought about it for 50 years. He said, if you don't find a way to make money while you sleep, you will work until you die. Now, That's not a clever quote to write on a wall. That's mathematics, that's physics. It's the fundamental law of financial freedom, and it has nothing to do with how hard you work or how many hours you log. It has everything to do with whether your money is working when you aren't. Here's the brutal truth. Most people avoid hearing your paycheck is not wealth. It's a rental agreement. Your employer rents your hours. You hand them over. They hand money back. And the moment you stop showing up, the income stops every week, every year, forever, until you either build something that pays you while you sleep or you simply run out of years to trade. The speculator, always chasing the next hot position, never crosses this threshold. He's always arriving somewhere temporary, never somewhere permanent. He's like a man running on a treadmill at full speed, genuinely convinced the speed is getting him somewhere. The investor builds toward the freedom threshold systematically, quietly, methodically, with dry powder always held in reserve for when the real opportunities that markets periodically hand you actually appear. Not in a rush. Rushing is precisely how people make expensive, irreversible mistakes, but steadily, steadily, steadily. And here's what I know. Some of you are thinking right now, I don't have enough to start. I hear that, but listen carefully. In 1942, I had $114. I was 11 years old. The starting amount is not what matters. The habit of starting and the refusal to stop is what matters. Starting, the second thing I would buy before any luxury, before any lifestyle upgrade, before almost anything else, is income that runs while I sleep. The freedom equation crossed. Pillar 3, the sleeping machine, wealth that runs without you. Now here's the one most people think they understand, but almost nobody actually builds, at least not deliberately. I call it the sleeping machine. Here's the core idea. Every working person starts their financial life with exactly one income stream, their labor. They trade hours for dollars. It's honest, it's necessary, but it's finite. Because your hours are finite, your energy is finite, and your health, with the greatest respect, does not improve with age. The sleeping machine is different. It's a set of assets and structures that generate income completely independently of your daily effort. It runs in the background while you're at dinner, while you're asleep, while you're living, whatever life you've built. Now, most people assume that kind of setup is reserved for people who already have millions already, that you have to be rich to start building it. And that assumption, that one mental barrier, is one of the most expensive things a person can quietly carry around for decades. Let me tell you about something I watched happen in 1958 when I was managing the Buffett partnership out of Omaha. I knew a school teacher, modest income, nothing glamorous about his situation at all. He'd spent 15 years quietly building a portfolio of dividend-paying stocks. He treated those dividends exactly like a second paycheck, reinvested every single cent, never once touched them for anything else. By his mid-50s, that portfolio was generating more monthly income than his teaching salary. He didn't quit teaching. He genuinely loved the work. But the freedom in his eyes was different. The way he walked into a room was different. The way he talked about choices was different. Because he knew something most people his age would spend their remaining years never figuring out. He had a sleeping machine running 24 hours a day, 7 days a week, without a single complaint, without a single request for overtime, without a single sick day in 15 years. Here's what the speculator does instead. He puts money to work once, watches it nervously for 3 weeks, panics at the first real dip, pulls everything out, waits for certainty, which never arrives, by the way, and then starts the whole anxious process over. He interrupts the machine before it ever reaches critical mass every single time. And what does that actually cost him? Not just money, time, because the sleeping machine doesn't build in days or months. It builds in years, decades. The patient front-loading, the grinding, unsexy discipline of the planting season is precisely what most people cannot sustain long enough to actually see the harvest. I call this the oak tree doctrine, and I have staked my entire financial life on it. You plant the acorn in the dark, you water it in the dark, And for years, sometimes many years, there's nothing visible above ground, nothing that would impress anyone at a dinner party, but underground, the vault of future income is being built, root by patient, silent root. And then one day, usually when you've long since stopped checking for it, the growth becomes completely undeniable. The machine reaches critical mass. Dividends compound the dividends. The sleeping machine runs independent of your anxiety, your daily attention, your mood, your energy level, and you've built something that will outlive you. The third thing I would buy if I were starting over tomorrow with nothing is a system, a compounding set of assets structured deliberately to generate cash while I sleep. The sleeping machine, pillar 4, the wisdom arsenal, the asset they can never tax. And here's the one most people skip entirely. Even people who genuinely understand the first 3 pillars, it might be the most important one of all. You know, Charlie and I used to talk about this, Charlie would say, and I'll paraphrase because his words were always sharper than mine. He'd say, the single best investment you can make is in a knowledge moat. Think about what a moat actually is. Deep water surrounding a fortress. It's what keeps the competition out. It's what makes a castle truly, genuinely impregnable. You can't storm what you physically cannot cross. Economic moats apply to businesses, and I've spent decades hunting for them. Brand moats, switching cost moats, network effect moats, infrastructure moats. The moat is precisely what separates a truly great business from a merely decent one. But the exact same principle applies to your mind. When you build specialized knowledge, when you become genuinely, authentically rare at something the world needs, you create a personal moat, a scarcity premium the market simply has to pay, whether it wants to or not. I still read 5 or 6 hours every single day at 95. People find that eccentric. But here's the thing, compound interest doesn't only work on money, it works on knowledge too. Every book builds on the ones before it. Every mental model sharpens the others already inside the arsenal. The wisdom accumulates silently, invisibly, relentlessly. And here's the part that genuinely floors people when they sit with it long enough. That knowledge, that accumulated compounding wisdom, it cannot be taxed. It cannot be inflated away. It doesn't drop 40% because the Federal Reserve changed interest rates. The IRS cannot reach it. Market volatility cannot touch it. It compounds silently in your mind while everything else around you fluctuates. Now, let me draw the contrast because it's stark and it matters. The speculator spends his evenings scrolling, checking prices, reading financial headlines engineered specifically, deliberately, professionally to trigger emotional reactions and keep him clicking. He's consuming anxiety. He's marinating in manufactured noise, and that noise quietly, steadily erodes his capacity to think clearly at exactly the moments when clear thinking is most valuable. The investor spends those same evenings reading annual reports, biographies of great builders, history, philosophy, the accumulated judgment and hard-won wisdom of people who built things that lasted generations. He's compounding wisdom, and that compound interest, invisible, untaxable, unstealable, is building the decision clarity he'll need when the next panic arrives. And when it arrives, because there's always another one, the speculator reacts with fear and makes decisions he'll spend years trying to undo. The investor responds with calm, cold rationality because he's read about this pattern before. He's seen exactly what comes after. He knows that's what the wisdom arsenal ultimately produces, not hot takes, not opinions dressed up as analysis. Cold, rational, unhurried thinking, precisely when the market most desperately wants you to be irrational. The mind is a moat, fill it daily. Wisdom compounds. The fourth thing I would buy, running parallel to everything else every single day, is knowledge. Specifically, the kind of specialized compounding wisdom that builds a moat nobody else can cross, tax or steal. The wisdom arsenal, pillar 5, the 4-pillar fortress engine. Why the sequence changes everything. All right, we've covered the 4 things I'd buy first. Now, let me show you how they work together, because this is where the real power lives, not in any single pillar, but in the way they reinforce each other. Here's the mistake most people make when they encounter a framework like this. They treat each pillar in total isolation. I'll focus on investing for a while, then build systems eventually, then maybe work on knowledge someday when things settle down. That's not how a fortress gets built. A fortress isn't 4 separate walls standing apart from each other with gaps between them. It's 4 walls working together seamlessly, mutually reinforcing to protect the same interior. So let me walk you through the sequence, because the sequence is everything. Stage 1, active capital, your labor, your sweat equity. This isn't glamorous, but it is the foundation. You cannot build anything without initial resources. Even in 1942, with $114, I needed the paper routes first. The ammunition has to come from somewhere before it can be deployed. Here's the critical distinction. The speculator uses his labor to fund consumption. Every raise funds a lifestyle upgrade. He keeps the treadmill running faster, but he never, ever steps off it. Never. The investor uses his labor to fund acquisition. Every paycheck, before the rent, before the groceries, before anything discretionary whatsoever, funds the ownership fortress, the sleeping machine, the wisdom arsenal. He converts earned income into producing assets as methodically and relentlessly as a farmer converts sunshine and water into a harvest. That's what pay yourself first actually means at its deepest level, not saving what's left over after spending, investing before you spend. The difference sounds deceptively simple. The results compounded across decades are extraordinary. Stage 2, ownership. Once you have consistent income from your labor, you deploy a disciplined, non-negotiable portion into productive businesses, not speculatively, not chasing whatever performed well last quarter, systematically, with a genuine margin of safety built into every single purchase, because the margin of safety is your armor against being wrong, and you will be wrong sometimes. Stage 3, systems. Once ownership starts generating returns, you reinvest them consistently, automatically, if you can set it up that way. The dividends compound. The dividends, the sleeping machine begins to run with increasing independence from your daily decisions and your daily moods. And here, right here, is the inflection point most people never reach because they interrupted the process too many times too early. The moment when the sleeping machine generates more income than your labor does, that's the freedom threshold crossed. That's the day your clock genuinely belongs to you and nobody else. Stage 4, the wisdom arsenal, doesn't operate sequentially. It runs in parallel every single day. Reading, thinking, asking better questions, building the knowledge moat. Because every major financial mistake I've ever made in 75 years, and I've made several notable ones, came from operating outside my circle of competence. Outside it. Berkshire Hathaway was a failing textile mill when I bought it. I've admitted that more times than I can count, and I'll admit it again freely. I bought it cheap, but cheap doesn't matter when the underlying business is fundamentally broken and declining. The real lesson from Graham, the one that has stuck for 70 years, is that the margin of safety begins with understanding the business itself. The price is secondary, always was, always will be. Now, here's the concrete, specific action I want you to take today. Not next week, not when things calm down today. Calculate your freedom number. What do your actual monthly expenses total? Multiply by 12 to get the annual figure. Divide by 4.04, a conservative, widely referenced benchmark, and that is the portfolio size your fortress needs to reach to make your labor optional. Write it on paper. Physical paper, put it somewhere. You'll see it every single morning. Because clarity, a specific number, a defined destination on a real map is what actually defeats the scarcity mindset, not willpower, not motivation, not inspiration from a video on the internet. Clarity, a number, a direction, then build toward it sequentially, patiently. with the same quiet, relentless consistency that never makes headlines, but absolutely, inevitably, over the course of real decades, makes fortunes. Before I close, something important I want to be clear about: everything I've shared today is for educational and informational purposes only. I'm not your financial advisor. Nothing here constitutes personalized investment advice for your specific situation. Before making any significant financial decision, please consult a qualified financial professional who understands your individual circumstances. Now, let me tell you something I want you to carry long after this video ends, long after it. In 75 years of investing, through every form of market panic, recession, bubble, and crisis that human beings have managed to invent, I have never once lost sleep over a fortress I built patiently, understood deeply, and refused to abandon simply because the crowd around me was running for the exits. Not once. Not in 1974, when the pessimists were the loudest voices in every room. Not when the dot-com bubble made every speculator temporarily look like a genius. Not in 2008, when sober, intelligent, serious people were visibly terrified about what Monday morning would bring. Why? Because I knew what I owned. I understood the ownership fortress. I built the sleeping machine. I had dry powder, financial ammunition ready and patient, waiting for the moments when fearful people were selling wonderful assets at clearance prices. And I had spent decades building the wisdom arsenal until it was deep enough to provide real clarity, real bedrock, when everything around me was shaking. The speculators around me, the day traders, the hot tip followers, the cryptocurrency gamblers staring at their phones at midnight watching numbers they didn't understand move in directions they couldn't control. They didn't sleep. They couldn't, because they built their entire financial lives on a foundation of noise instead of bedrock, noise instead of bedrock. And that contrast is the ultimate gift of building these four pillars. It isn't just the wealth, though the wealth is real and it grows and it compounds and it outlasts you. It's the sleep, the deep, genuine, untroubled sleep that comes from knowing your fortress stands on solid ground, from knowing that no matter what the market does on any given Tuesday, the sleeping machine keeps running, the ownership fortress keeps compounding, the wisdom arsenal keeps accumulating, the vault keeps filling. You made sound decisions patiently, not because the market told you to, not because a talking head gave you permission, because you understood the geometry of real wealth and you had the emotional stoicism, the quiet, unshakable clarity to let it work. That stoicism is not a luxury reserved for people born with advantages. It is a discipline, a daily practice. And it is available to every single person who chooses deliberately, consistently to build it, one brick, one patient decision, one quiet year at a time. So here's what I want to leave you with today. 4 things I would buy first in order if I were starting with absolutely nothing. An ownership fortress built on productive businesses with a genuine margin of safety in every purchase. An income stream that crosses the freedom threshold before a single luxury is funded. A sleeping machine that compounds while I go about living my life. And a wisdom arsenal that builds a knowledge moat nobody alive can drain, tax, or steal. Those are the assets. Those are the priorities, not status symbols, not trending tokens, not whatever the financial internet is most breathlessly excited about this particular week. Build the fortress, stock the vault, let the machine sleep, and sleep well, sleep well, sleep well. If today gave you something real, a clearer lens on what permanent wealth actually looks like and how it's actually built, then do me one favor. Hit the like button for Elite Money Mindset. Share this with someone who needs to hear it. Someone who's working as hard as anyone you know and still wondering why the real wealth never quite arrives. This kind of thinking is genuinely rare, and the people who need it most are almost always the last ones to find it. Subscribe to Elite Money Mindset if you want to keep building slowly, patiently, brick by brick, with the rational stoicism that actually produces lasting permanent wealth, because here at Elite Money Set, we believe in one thing above everything else. I'll see you in the next one.